Good afternoon, everyone. We are live. Welcome to Debt Free Fridays. I'm super excited for today. Hello, hello, hello. High Cash Budgets. Welcome on. So good to see you. I'm excited too. Mary, hello. Good, or I'm talking about good morning. Good afternoon. Mocha, good afternoon. Good afternoon. Carolyn, good afternoon. Welcome on, you guys. So me one, good afternoon. Hi. I hope you guys have had a wonderful Friday. Good evening, Katie. Good evening, good evening, good evening. We are so excited about Debt Free Fridays. Today we are talking all about credit. We have Sakia, the credit coach, and she is going to be dropping the gems. Hey, Jennifer. How are you? Hi, Emily. Good evening. It's not coming on. There it is. Where's Emily? Hey, Emily. Good afternoon. Good afternoon, Kenya. Lady H, good afternoon or good evening. DAJ, good evening. I don't know what today is, y'all. I ain't had no coffee. I ain't had no food. I'm just drinking H2O. Homestead with a purpose. From Oklahoma. Hello, hello. Welcome. Anastasia, welcome. I need my glasses. Y'all know I can't see. Alice, welcome. Andrew, welcome, welcome. Just KD, good evening, good evening. Marilyn, good evening, good evening. So, all the way from Brooklyn, what up? Good evening. Blackjack, Leo, hello. Is that my cousin? Is that my cousin? Blackjack? I don't know. Georgia in the house. Tracy, hello. Hi, Marine, hello. My son is in your state. Oh, in California? What up? I love California, y'all. In your state, yes. I hope he's having a great time. I hope he's loving it. So, you guys, we're going to go ahead and get started. I have Sakia, which is Speaks Sakia. She is on. She's going to come on. She is a beast in the credit world. We're going to be talking about strategies to pay off debt, but then also credit. So if you have any questions, leave them in the chat. We will be more than excited to answer those questions that you guys have. Oh, he's in the military. Oh, I think he may be in San Diego. I think they have a spot in San Diego. So I'm going to go ahead and bring her in. Hello, Sakia.
Hey, y'all.
Welcome on. We are so excited to squeeze all your knowledge that you have out of you.
I'm excited too. I'm so glad to be here. Thank y'all for having me.
Absolutely. Thank you for taking
Besties. Hey,
time out.
besties.
Besties. Yes, thank you for taking time out on a Friday afternoon. I know it's 8 o'clock in your time, 5 o'clock on my time, but thank you so much for showing up for the besties. We are just all out here managing our money and trying to buy houses or get our credit right, pay our bills on time, just get the budget right. You know, we're just out here in different places, however, all having the same goal. So thank you so much last week sharing your knowledge in the chat about credit, because I don't know.
I love how you show just said, okay, Sakia gonna be here next week. I say, now how I'm gonna be there next week? She ain't even asked me for real. You just want to tell me, but I'm here. I'm here for the best because if I wasn't on the camera, I'd be in the chat anyway. So I'm excited.
Absolutely, absolutely. So we're going to go ahead and get started because I know this is probably going to go a while. Remember, guys, if you have questions, put them in the chat. I am going to, we're just going to kind of go back and forth, and we'll be answering questions. But first, we're going to start with, do you want to start with debt payoff
It's up to
strategy?
you. Well, let's talk about it. The people here for the credit. What y'all want? If y'all want us to talk about debt first, drop a number 2 in the chat. If y'all want us to talk about credit first, drop a number 1 in the chat. So number
That's
1 if you want to hear about credit, number 2 if you want to hear about debt. Let's see what the people say. Let the people vote.
So Lady H says, oh, hold on. I got to remember. Think I'm the only one who can see this. I really don't make enough to pay my debt. I am considering bankruptcy. Oh, that's good. So what was two? Two was which one
I
was two?
forgot, y'all. What 2 was? 2.
What was number two?
I think 2 was debt payoff. So they want to talk about debt payoff strategies first. There's a lot of 2s in the chat.
Okay.
All right. So let's talk about different ways to pay off your debt. Jasmine covers some of these things on a weekly basis, but I'll go into a little more detail. Okay. So the first way that you can pay off your debt, a debt payoff strategy, there are 2 methods. There are 2 things to consider. Let's start there. 2 things to consider. The first thing is you want to consider which is more important to you. Are you looking to reduce the amount of money you are paying on a monthly basis? Or are you looking to reduce the interest rate of the debt you're paying? And it sounds like the same thing, but sometimes it can be a little different, especially when we're talking about loans. Okay. So we have 3 ways to pay off debt. Number 1, you can do a balance transfer on a credit card. Number 2, you can do a personal loan. And number 3, you can use equity against personal property. So, just to break it down a little bit further, when we're talking about balance transfers, now you hear balance transfers. I hear a lot of people in my experience, a lot of people don't trust balance transfers because it seems like it's tricky. Because
Mm-hmm.
I don't need another credit card, Sakia. I got enough credit cards. I don't want another one. Okay. But you have to consider how much interest you are actually paying on that credit card. So right now, I want to give you all my go-to spot for balance transfers. Okay. Now I'm gonna tell y'all the go-to spot. But before I do that, I want to tell y'all, before you go applying for a balance transfer, please, please, pretty please, with a cherry on top, make sure that you are current on your monthly payments for at least 12 months. Make sure you have no recent late payment. Okay, that's number 1. And number 2, you also want to consider your income, because getting a balance transfer means you have to get approved for another credit card. And if your debt to income, you got to consider your utilization, the amount of credit that you have outstanding. If you have 100% utilization, which means you have $10,000 in available credit and you owe $10,000, that means you are at 100% utilization. You've maxed out everything that you can use. Chances are you getting approved for another credit card will be slim. And if you do get approved, the amount that you get approved for is going to be low. So we want to maximize the amount that you can get approved for by paying attention to those things. Maybe you're not ready for a balance transfer. It's possible. It's possible. It's
Yeah, because
possible. You may need. Mhm.
what if I was gonna ask, what if you can't qualify for anything? That was the state I was in. I couldn't I couldn't qualify for nothing to be able to pay anything off as related to the credit cards.
Mhm. If you don't qualify, we got to take a look at why you don't qualify and start addressing some of those things. So the reason why you won't qualify is for something that I mentioned, like utilization. Now, Jasmine, I will say, just to give me a little background, I've worked in 3 different financial institutions, banks. Okay,
Mhm.
I have worked with I've helped people with home equity lines of credit, car loans. I have a lot of experience in a financial background. I've also been in the credit space since 2016. So in a situation like yours, Jasmine, you may not qualify for a credit card because you have a balance transfer, but you are also a property owner. You have a home, and your
Mhm.
home accrues equity. You have equity in your home. So if I were in a bank and you came and said, Sakia, I need help with my debt, what are my options? I would
Mhm.
look at a balance transfer. I would look at, I would look at your outstanding debt, because your debt, just for example, I ain't looked at Jasmine credit report, y'all. So don't think we in her business, okay? We're not in her business. All right. I'm just saying for example's sake. Okay.
This is an example,
So
y'all. Get y'all teeth.
So if you were in front of me and you said, Sakia, what are my options? And I looked at your outstanding debt and you were at 100% utilization, I would then go to look at, do you qualify for, I would look at your equity in your home. How much equity do you have? Um, as it relates, and I don't want to go too deep, but as it relates to a home equity line of credit, borrowing equity, borrowing against your home, you can only borrow up to 80%. So we would look at those numbers and see how that works out for you. Now, where your utilization it's understandable that you would need a loan to help reduce some of that debt, reduce the amount of interest, reduce the amount of payments that you're sending out, because you want to consolidate it and make one payment. Those things being understood, you still have to have good payment history.
Okay.
Okay. Because before we give a loan, we want to make sure that, like, your credit history, your credit report is like your financial report card. It tells, I can look at a credit report and within seconds I can tell a story. Your credit report is going to tell me a story about what's been happening with you. So if I see that you've had late payments within the last 12 months, what's going on? You got a cluster of late payments. Maybe there was a medical situation. Maybe you forgot, or etc. But those type of things are, you're considered a risk when you have late payments. So now we have to get some consistency in your payment history, some positive consistency. And as those positive payments continue to grow, you increase your chances of approval. I'm gonna pause now because I see the comment section rolling.
Yes, they rolling. So let's see. So here's a question. Once paid, does it take 3 months to clear your credit report?
Does it take 3 months to clear? When you say it, I'm not sure. In any situation, it depends on the account, who holds the account. So for example, we have a company like Capital One, for example. If you are 1 day late on your payment, they report it as 30 days late on your credit report because of how they calculate payments. Whereas with a student loan, you can go up to 90 days before they actually report it. So it just depends on who's reporting the account and how they actually report it. In most cases, you will be told that it could take up to 30 to 60 days to update on your credit report. Because another thing to consider is, your credit report updates once a month. You may make the payment the first day after your credit report is updated. So it's going to take another cycle. So that's why you usually get that range. I hope that answers the question.
All right. So Sharon says, I think interest rate is the devil.
I call it a waste of money. I call it a waste of money, and I hate paying
It
interest.
is.
I hate it
Yeah.
so.
So let's see. Plan budget save. Personal loans are too high on interest. Loan equity is not recommended by Dave Ramsey.
Oh, I'm so glad you said that. Let's demyth this comment right here. All right. So, in the
What up,
financial
Dave?
in in the financial institution that I worked at, I worked hands on with someone who had, I want to say it was like $46,000 in debt. This was years ago. I can't remember the exact number, but he had so much credit card debt. He was making monthly payments in 5 different directions. He had excellent credit, he had excellent payment history, and he had high income. We offered him a personal loan And loans, the rates on loans change all the time. Right now, the rates on loans are higher, on the higher end. So back then, you could probably get a personal loan for like 7%. I believe now it's closer to 10%. But in the grand scheme of things, if you have 4 credit cards and your interest rate is 20% or higher, which is very common for cards like Capital One, a lot of the store cards, a lot of the, especially because the prime rate is increasing, then to pay an interest rate of 10% and make one payment, it means that more of your monthly payment is going towards the actual debt and not towards the interest. So let's say we go without a personal loan, even though we qualify, we go without a personal loan, we start making 5 different payments on credit cards that all have interest rates of 15% or higher. You're going to decrease that when you put it in a personal loan that has a 10% interest rate. You're saving thousands and thousands and thousands of dollars by consolidating those multiple payments and putting it into an interest rate. So I will also say, though, Plan Budget Save, that be very, very careful with online personal loans. Let me be clear about that. Because online personal loan, what do people name now? One Main Financial.
Oh,
They
one man. Oh, they always send me
Main
something.
Financial, they are predatory. They are predatory. So anytime, the only way, y'all listen to me, the only way I would recommend a personal loan is if it is with a financial institution where you could pick up the phone and call somebody, not pick up the phone and call somebody. You could walk in. Common
Mhm.
banks, Bank of America, Chase, Truist. I know Truist has a loan that they offer, a personal loan that they will offer, where designed specifically for debt consolidation. Some banks don't offer it, some banks do. So do your research and consider a personal loan if you qualify. Stay away from online personal loans. Stay away from cash advances. It's all the devil. It's all a trick.
Yeah, that
Don't.
yes.
It
I've
sounds good
done that.
on paper.
Payday loans and
When it's time to pay it
I
back, it's
I
predatory.
don't think I told y'all about my payday loans.
Listen,
Lord Jesus.
I
So
already.
plan, budget, save. I'm here to hopefully get good advice. Well, we are praying that that you will
I'm hoping that you find this advice to be good as well.
Denise says, what are your thoughts about personal loans? I'm strongly considering due to extremely high interest rates. You just definitely answered
Yeah,
that question.
just stay away from online loans. Do not pass go. Abort mission. Duck, dodge, run, hide. Okay? No online loans. Only if your local financial institutions offers loans. Do your research. Make sure, here are some questions to ask when you are considering a consolidation loan. Okay? Here are some questions to ask. And then when you get the answers to these questions, you will know if this loan works for you. Okay, you want to know what is the rank. These are just questions, they're general. The company should be able, the bank should be able to provide you with a quote. Don't let them go pulling and playing on your credit now. Please hold. Okay, just ask for a range. They can do that. They can give you a range. If I have fair credit and I have $20,000 in credit card debt or consumer debt, how much would my payment be for the course of X amount of months? So you always want to consider, how long is the term? What is the term of the loan? If I took out a personal loan, what term options do you have available? Does it have to be a 12-month repayment term? Does it have to be 48 months? Do you have an option for 60 months? What is the rate? What is the range of the rate that I would pay? What is your minimum rate? If they say their minimum rate is 20%, you automatically know this ain't the loan for me. That's too high, baby. It might as well be a credit card. That's too high.
Yeah, that's high.
Okay. You want to ask, what's the rate? What's the term? You also want to ask, is there a prepayment penalty? If I pay it off early, will I be charged? These are things you want to know before you agree to it. Do your research. Call at least 3 to 4 companies, 3 or 4 banks. that you could walk into. Call Bank of America, Chase, call Truist, call, I don't know, credit unions. See,
Credit
I
union,
know
yeah.
credit unions also offer personal loans as well, and credit unions traditionally have lower rates than the more popular financial institutions.
Awesome. Thank you. I hope that that answers your question, Denise. Next question by Deneza. I think that's how you pronounce your name. What is good interest good? What is makes good interest good?
Maybe what makes good interest good? Well, the short answer, no interest is good, but sometimes interest is worth it. The good interest, a good interest rate is on the lower side of interest. If you take a look at your credit card interest rates, you'll see that those interest rates sometimes are on the higher end depending when you actually obtain those accounts. But when you're looking to consolidate or pay off your debt, you want to compare. You want to find the interest rates that are lower, anything under 10%, I'll say. And I'm only saying under 10% now because of where we are on the financial market. If you would have asked me 2 years ago, I would have said anything under 7%. But because the market is going in a different direction, then I would say anything under 10% is considered a more favorable interest rate as it relates to paying off debt. Does that answer your question, Denasia? That's my daughter, by the way.
Oh, I think I answered. I pronounced her name correct.
Yeah, Denasia. Yeah.
Awesome. So Lulu Shonda says that's what I'm thinking about. Not doing it yet. All right, Shonda, a loan from your retirement account may be an option for some too. That
Yeah.
is something that I did.
Yeah.
Um, all don't agree with it. I agreed with it, and
Yeah.
especially in a situation of an emergency, I definitely agree with it, and I take that risk. You know, if I'm let go from the company or whatnot, but that is something that I did do, and I approve
Listen,
that.
anytime it comes to a financial decision, and I need you guys to, you besties, hear me and hear me clearly, please. Please don't be discouraged about doing what works for you. Everybody financial portfolio is like a fingerprint. It's different. We all have, I mean, we all want to obtain the same thing. We all want to be debt free, right? But the way we're going to go about it, it may look different for some of us than it does for others. There are multiple options, and there are plenty of places to obtain information from and do research where you can narrow it down. Do not hold, like what I'm saying is not law. What Jasmine says on her channel is not law. It's just her experience. And it's my experience. I've worked in the financial space for a very long time. So these are what I share is some listen to me now, y'all. I done carried on financially. Okay. I done got carried away financially sometimes. So I have personal experience, and I also have experience. I've helped hundreds and hundreds of people financially in corporate and then also in my own business. So just remember that it's a fingerprint. It may vary from person to person. Don't be afraid to do what works for you. And if you think it works for you, you tried and it don't work, don't worry about it, baby. It's another option. You can try something else. Okay. It's
I
always
love
an
that.
adjustment to be made.
I
Yeah.
love it. Do what works for you. That's one thing that I really seriously learned and held on to when I came back is that you have it's so much noise out there. Don't do this, don't do that. It's that guru and that guru, and don't buy the coffee, don't buy the clothes, don't buy the shoes, buy the shoes, buy the coffee, buy the clothes. I mean, it's so much out there that you literally have to do what's best for you and your household. Like, can't nobody tell me. Yeah, I think somebody was saying like, oh, you shouldn't buy perfume or something like that. um, and I was like, oh, I'm gonna buy my perfume, the $400 bottle of perfume, and then I'm gonna pay off thousands of dollars in debt because
Mhm.
I know personally that when I tried it that way, like not doing anything and just being super responsible, saving money and paying off debt, once I fell into a deeper hole because I didn't have balance in my life. I'm a
Yeah.
person who needs balance. Everybody doesn't need balance. I need balance. So you definitely have to do what works for you and your household when you're making movement, though.
Yeah.
You know, now if
Yeah.
me buying the perfume wasn't helping me to move or I didn't have gains, then yes, I would have pulled back and said, okay, that's probably not going to be best.
Yeah.
Um, so you always, I just love that. I love when you said it's a fingerprint. I never thought of it that way, but
Mhm.
it definitely
It's
is.
exactly what it is.
So, Lady H, so I can go to my bank or credit union and ask for options about a credit card, about credit.
You can. Most bank representatives will not, they can't consult you on your credit per se. Like, just for example, when I worked in the bank, we weren't allowed to tell people, like, we would say surface level things, but what you can do is go to your bank or credit union and say, what options do I have for consolidating my debt? Do you all have any products that will assist me in consolidating my debt? And they'll tell you if they have the options and what the options are and what that'll look like for you. But you can ask those type of questions. Yes. And
Oh,
maybe
that's
you'll find somebody like me who just whisper real low and just give you the tea anyway.
I didn't even know that you could go to a bank and ask that. I had
Absolutely.
no
That's what
idea.
that's what they do. Because listen, I worked in one of the last bank I worked at before I quit corporate America. And I've gone back since because it's real out here. Okay. But the last bank I worked at before I quit, I think it was 2021. I worked in a high end area, plenty of doctors, plenty of lawyers. I was so shocked at how many of those professional people had no idea about financial literacy. I was so shocked that they didn't know about the benefits that were available to them. I just thought because they were doctors and lawyers that they just knew everything, and they didn't. They would be so surprised. They had plenty of debt. Plenty of debt. It's out there. So these are common questions. A lot of times, debt carries this thing where it just makes us ashamed a little bit. We kind of hide from the conversation. When I don't know about y'all, but when I was growing up, money was not a conversation that we held in our household. So the way I learned was I grew up, got fast, and started carrying on. And then when I fell on my face, okay,
She said, I got
I
fans.
started
Yes,
to ask questions. I think I was like 21 or 22, maybe. I can't remember if I had the oldest I was probably 24. I pulled my credit report for the first time, and I printed it out at my job because they had the ink in the paper. Hello, I printed out my credit report at my job, and it was like a textbook. It was so thick. I thought it was Spanish. I got so overwhelmed with it, child. I put that thing in the closet. It might be still in there somewhere. I put that thing in the closet and I went on by my business. I said, oh, hell, I just
oh, yes,
too
yes. I
much. So
love it. I love it. I love it. That's your baby. I don't know if you know what that means. You know what that means?
that's probably my grandson typing on the
Oh,
keyboard.
hey, grandson. Let's see. So, Shonda, a loan from your retirement account most often has a lower interest.
Yep.
You are right about that. It sure does. Is it good to pay your debt with interest by your tax payment refund?
Ooh, this is a great question. Ooh, let me give you because it's tax season. Let's talk about it. Okay.
Tax season.
All right. So here is what and Jasmine, you touched on this. I believe either it was Monday or last week Friday. I just be on Budget Treasures page so much I can't keep up with the information, but I'm
We
consumed.
like friends. We need to, yes.
All right, so a couple of things. What I really, really, really want you guys, you besties, to know. I don't want to say guys. Okay, so tax season is a time where you will see an influx of collection letters in your mailbox, collection calls coming to your phone because creditors bank on the fact that you have extra money in your hand and you have access to it, and they're gonna try to guilt you into paying it. I just want to be clear about something now. There's a difference between debt and collections. Listen to me. Stay with me. Chad Ocho Cinco say, stay with me now. Listen to me. Okay. So debt is money that you owe for accounts that you actually have access to. active credit cards, loans, and things that you actually are making live payments on. That is active debt. Then you have collections. The collections are important. I'm not saying they're not important, but it's more important to pay your active debt because these are the things that are still actively impacting your credit score. For example, if you have a collection for old raggedy behind Sprint, oh, Sprint, get on my nerves. If you have a collection for Sprint for $500 and you have a credit card with a balance of $1,000, before you call Sprint and work out a payment arrangement for that collection account, I want you to consider how you can strategize spreading some of those monies on that card with the $1,000 balance. Does that make sense?
It does. It does. I didn't even think about that. Or no, I didn't know. I got my pen. I hope y'all got y'all pen and y'all paper and y'all writing down notes, because 2024, I have told you guys we are going to be in a different space next year, 2025. And it's all about the knowledge. I did talk about that in one of the videos. If you know better, you can do better. So I have these lives not just to be doing something, but so that you get the information, you write it down, you regurgitate on it, you think about it, and you act on it, if it's for you. So I got my pen and my paper. I did not know that, because I thought you was gonna say, "Oh, go ahead and pay off the collections because it's hurting your credit." That's what I thought.
Listen, it's not favorable. Okay, it's not favorable on your credit. Collections are not a positive mark on your credit report. But I want you're also not making monthly payments on that collection account. But that active credit card, if you go to that active credit card is impacting your debt to income ratio. It's literally taking live money out of your account. So I want you to come up with a strategy to pay down your active debt before you go throwing all of your money into collection accounts. Okay, that's number one. Number two, I'm trying to figure out how I want to say this now. Number two, do not throw all of your money into your debt without an emergency fund. You need to build up a savings. It's extremely important. And girl, go buy yourself something too. Now, I know this debt thing, it give you a headache at night. And when you close your eyes, you might think about it. I know it for real. But hey, you gotta take a deep breath,
I agree. I don't think you can throw all your liquid money at debt, because if something happens,
you're gonna be right back in debt again.
You're gonna be right back in debt. So yeah, and that emergency fund can be whatever you deem it for your life, because everybody's situation is different. It can be 500, 1,000, 2,000, 3, whatever. But I agree.
And you don't have to start off with a huge emergency fund, but just say, for example, I remember the days when I used to get 10,000, 12,000 tax refunds. Them days is long gone. These kids is grown and paying bills and working. I couldn't even, anyway. So it depends. You don't have to start off with a large amount, but if you do get a decent credit, decent tax refund, and you are able to set aside like $1,000, do it. Set aside $1,000 and put it in a high yield savings account so it can grow some interest. But you definitely don't want to exhaust your tax refund on credit card debt. Another thing, I want to tell y'all this before I forget. Y'all got your pens and papers? You ready? Before you pay any collection, do this. Y'all ready? I don't know if y'all ready. Can y'all please drop a number 1 in the chat if y'all ready? I just want to make sure everybody on the same page. I just want to make sure you're ready.
Throwing up my 1. Be ready. I want to know, because
you're ready.
This collections and creeped up on my credit. Like,
we can go get it right.
Because you said that around tax time, I don't get it, but they come around.
They come
like, where did they come from? Like,
no, listen, every season.
the balance due? But okay, I'm ready.
Every season. Okay, I see the ones in the chat. Here we go. Do this first before you pay any collections. I want you to go. I need somebody to type it in the chat. For those of us who need the screenshot, maybe somebody driving or something, or maybe they ain't got no pen and paper. Type this in the chat. I need you to go to annualcreditreport.com. I know you got Credit Karma. I know you got Experian mobile app. I know it's all there. I need you to go to annualcreditreport.com. And I want you to pull. Shonda say they come out like roaches.
Oh, Jesus. Okay.
I want you to go to annualcreditreport.com and I want you to pull your credit report. This, listen to me, y'all, not free annual credit report, not free nothing. Annualcreditreport.com. If you go and you pull your credit report and it asks you to pay $1 or put your credit card information in to get your credit report, you're on the wrong site. Abort mission, start over, try it again. Okay. Annualcreditreport.com is absolutely free. Go here, pull your credit reports. You're going to have to pass some security questions. The credit report that I want you to focus on, you got TransUnion, Equifax, and Experian. All of them going to be there. But I want you to take your time and I want you to make sure you're answering all the questions right so that you can access this specific credit report. Y'all ready? TransUnion. I want you to pull your TransUnion credit report. The reason why I want you to focus on TransUnion is because of the three, TransUnion is the credit report that will show you when accounts are falling off of your credit report. Okay? So every state, you're going to have to Google, sugar. Every state has a statute of limitations where after a certain amount of time, a company can no longer collect on an outstanding debt. Okay? So when you go to TransUnion, TransUnion is going to show you when this account is falling off of your credit report. Now, Jasmine, let's just say, for example, you go to annualcreditreport.com, you pull up your credit report, and you see this little $50 collection because where she came from. She ain't got no business over here. You know where she came from. You might see that this collection is falling off your credit in June of 2024. Do you really need to pay it? Or can you take your money and move it somewhere else?
Come on with the tea.
Let's go.
Yes, come on with the tea. Because it has to fall off, right?
It'll fall off. So that now, because this company is going to be, this credit report is going to be the report that tells you when it's going to fall off. So you want to consider your goals. What is your goal for your credit? Is your goal to purchase a home? Awesome. Then you know to purchase a home, you need a little cash. Do you have the cash saved up? Or do you need to save the cash? Maybe you need a couple of years before you can get that down payment. Maybe you want to reduce your debt before you can get that down payment, before you can start saving up for your down payment. When is that account falling off your credit report? Is it falling off at the end of the year? Do you have time? Consider these things. So now, maybe the account is falling off in June 2024. My lips white? No. Maybe the account, sorry, y'all.
No, you good. You good.
Maybe the account is falling off in December maybe the account is falling off in June and you still need time to save up the money. Now you know that because the account is falling off soon, I could take this tax return and I can focus it on my debt and sleep good at night. Because I know, baby, when July 1st come, I'm going to be logging into my credit report to make sure the account is off. Hello.
Oh, that's good. That's good. That's good. I hope you guys wrote that down.
Did y'all get that?
Excuse me. I wrote it down. Okay, let me see. I got all these. I got a couple things. We just gonna kind of go through these really quick because I know I'm way up here. Now that I want another credit card, not that I want another credit card, but what is the best credit card that is offering 0 interest rate and zero interest rate? I'm sorry. My credit is not a problem at the time. I don't have much debt.
That's a great question, Katie. So, it depends on what you're looking to do. My favorite credit card company right now is Discover. Discover, depending on your credit portfolio, Discover is a great card for beginners. Discover is a great card because they increase your limit for no reason at all. They just go to slinging money at you. But American Express also has great cards, but you gotta, what's going to be most important for you, Katie, is what you're looking to do with the credit. The credit card, you want to make sure you get a card that works for you. Of course, no annual fee. A lot of companies, stay away from Capital One, okay? If you got established credit, Capital One is good when you are recovering. When you have had bad credit and you need a start, go to Capital One or Discover. They good. And you can go on both sites and see where you pre-qualify. But if you have good credit and you don't have too much debt, do some research. Another favorite credit card of mine, y'all write this down now for multiple reasons now. Citibank. Citibank has great credit cards. Citibank, my relationship started with Citibank because I needed to do a balance transfer. Citibank is the only credit card company right now that is offering 21 months of 0% interest on balance transfer. Y'all heard me? I say 21 months.
Now I have a question about that. I know I got to answer everybody else's question, but I have just one question. Now, if you get a Citibank card that is connected with, let's say, Costco, is it the same thing or is it different?
Question. Great question. So it depends on the terms and conditions of that exact Citibank card. You would have to see if that card has in their terms and conditions a balance transfer option. So, for example, let me go, y'all. Hold on. Let me go, y'all. Let me go real quick. Let me go to city.com because they have multiple cards. And then, for example, one of their cards may be 12 months balance transfer at 0%. And then they have another card for sure that is 21 months with 21 months with no interest. So you just have to look at the terms and conditions. So I'm on their website right now and they have let me see. They have a Simplicity credit card. They have the Diamond Preferred credit card. They have the Custom Cash card. Let me see, y'all. Hold on. Please hold. One of these cards have 21 months. I think it's this one. The Diamond Preferred credit card has 21 months of, oh, there it is. Simplicity. City Simplicity credit card. This for the besties that looking to do a balance transfer. They have 21 months on the City Simplicity card with 0% interest for the first 21 months. Now, Katie, you can do some research and compare what cards, what do you want to do with the card? Do you want to earn travel points? Do you want to earn cash back? You can just Google best travel cards. Some of those cards may have an annual fee. Some of those cards may not. It just depends on what exactly you're looking to gain. Because you are in a situation where you have great credit and you don't have that much debt, I would recommend that whatever card you decide on, make sure you only put on the card what you can afford to pay back in full at the end of the month to avoid paying any interest and to avoid any additional debt.
That's good. Thank you. All right, Sharon, is it good to pay your credit quarterly?
I want to say the first thing that pops up into my mind, the credit lady in my head is saying, baby, pay it every month because your credit report updates every month. You have to, and if I'm not answering the question the way you intended for it to be asked, Sharon, then you can definitely, go into a little more detail regarding this specific question, but you should be paying your credit cards monthly. You should be paying off your debt monthly, making monthly payments because your credit is updated every 30 days. And if you miss a payment, baby, you can just find the nearest cliff, put your credit score on there and push it off that cliff if you miss payments. Sorry.
Oh goodness, that's real. That's real talk. I got a personal loan from my credit union with a much lower interest rate than a credit card. Yes, that is true.
Yeah.
I'm sick of seeing stuff from one main. Me too.
Honey, they vultures. I'm telling you, my mom has
My
one.
mama, um,
Oh, I know she happy.
yeah, I know she happened to get. I paid off on Maine last year. They are constantly, of course, yes. Some told me don't go with them. How much more each month should I pay on a credit card? My monthly payments are 134.
That's a great question, Betty, and it reminds me of something I want to share with y'all. All right, so there is you can pay whatever you can afford to pay. This question is hard to, I can't give a general answer for this because it depends on what your interest rate is. It depends on what your balance is. But if you are going to make any additional payments on your credit card, do it when you see the balance is zero. So your monthly payment is 134. You know that the payment comes out on the 15th of every month. So today is the 15th, right? The you bet y'all better be using auto pay. I don't want to hit. You better be using auto pay. Okay, so you make the payment today for $134. And then tomorrow your balance is a zero. Wait, let me start over. What we in March, you got paid on March 10th. You've done your budget because you're watching Budget Treasures on YouTube. You've already done your budget. You know exactly how much money you'll have left to allocate additional to this debt, right? So it's time to make the payment. Whatever you have additional, don't make it before the payment is due. Do not make it before the payment is due. Wait until the balance is zero and then make the extra payment so that it can go towards, also it can go towards the principal portion of the balance. Does that make sense?
So you said, so when you say the balance is zero, you mean the payment is at zero?
The
Is that
minimum, you know how like once you make the minimum payment,
zero?
it'll say balance
Balance
is
too.
zero. But it's going to only be at zero for a couple of days because your statement date is coming
Will
up
come
in a few
out. Got
minutes. Okay,
it.
you got like a few days before your statement date post. Now, I want to try to explain the difference between a statement date and a due date. It's confusing if we go in it too much, but you can always find the statement date on your credit card statement. And the
Mhm.
statement date is the day that the bank take a look at your balance, see how much you charged or what your balance is, and determine what your minimum pay. That's when they being nosy and they gonna say, okay, TransUnion, Equifax, and Experian, this how much Sakia got on her credit card this month. That's what the statement date is. They coming to be nosy to see what's what so they can go and tell the credit bureaus. Okay, that's what a statement date is, right? But when you really want to maximize on reducing that debt, I found that it's best to pay it when the balance is zero because the extra money is going directly to the principal of that because they haven't the reason why you want to pay it when it's at zero is because they come in to check the balance in a few days. And if you make that $134 payment today on the 15th, and then tomorrow you go and make an additional $50 payments, by the time they look at the balance, it's going to be $50 less than what they anticipated to be. And you won't pay interest. You'll pay $50 less than interest. Does that make sense? Not $50 less than interest, but you won't pay interest on that extra $50 that you paid.
Right.
Does that make
Yeah.
sense, y'all? That makes
That
sense?
makes sense. That makes sense. I didn't think about that either. See, we learning, y'all. We learning, y'all. I'm excited. I guess I'd stay away from Karina for helping to pay for groceries because you have to pay it monthly. I don't know who's Karina.
Oh, I've never heard of that. So there's a program that helps you pay for monthly, helps you pay for groceries monthly. Is it like a subscription?
I was thinking, oh, I don't know Karina. I don't know her. Six. Oh, that's what I'm trying to hurry up because I think I'm so far up. I'm doubling up my payments to ten
So
dollars.
they were answering her question about how much extra should she pay on her debt.
Got
Mhm.
it. A penalty to pay off a loan is insane. Yes, it is, and it does happen.
Yeah.
Let's see. Here's a question. Can you talk about HELOC loans and pros and cons in comparison to mortgage refinancing? Which is better in dealing with high interest credit cards?
That's a great question. It really just depends on I believe, okay, it's all going to come down to the term. And if the term works for you, remember when we started, I said it's going to be based on whether or not you want to reduce the payment or if you want to reduce the interest. So, with mortgage refinancing, and Jasmine, I don't know if you, never mind, let me just go. In mortgage refinancing, you have the ability to stretch the term of the loan out. So you've already been paying your mortgage for 10 years. The total length of your mortgage loan is 30 years, right? When you do mortgage refinancing, you have the ability to keep it at the same term of 20 years. You want to refinance it to lower the interest rate, lower the payment, lower the payment, and then you pull some cash out from whatever that difference is. You have the ability to keep it at 20 years left to pay, but your monthly payment is probably going to be a little, it depends. If the interest rate go down, the monthly payment might be a little lower, maybe. But I think it's called cash out, mortgage refinancing plus cash out. It's going to be higher because you're borrowing cash against it. Your monthly payment is going to be higher if you keep it at 20 years. Now, if you want to make the payment lower, you then start over from scratch. And now you stretch it back out to the original 30 years. That is a con. I shouldn't say it's a con because it just depends on what works for you, because sometimes you sell a house and it don't really matter at the end of the day. You know what I'm saying? Sometimes you may not plan to be in your home for 30 years. You just really need to assess all of the terms, assess the rates, and decide if it's something you want to do. But mortgage refinancing usually means that in most cases, people do mortgage refinancing because they're stretching out their term to reduce their monthly payment. Now, when it comes to home equity loans, when we were issuing home equity loans, it was an additional payment to your mortgage. So, for example, your mortgage was $700 a month. You borrowed from the equity. The interest rate is dirt low. Okay, no higher than 3%. That was back in the day. It might be a little higher now, y'all. Don't hold me to numbers. But you pull out from the equity of your home, and now you have the ability. Here's where home equity loans can get tricky. You now have the ability to start paying back the loan principal plus interest, or you have the ability to pay interest only. Most people do interest only because the payment is so low. That means you're only paying on the interest of that equity that you pulled out from your home. I hope that makes sense, y'all, because I can really talk about this stuff in my sleep.
Yeah, I will tell you, I am definitely afraid to do any of the sort. Well, not refinancing.
Mhm.
Only financing if it'll make my interest rate lower to get a lower payment. I think, but I wouldn't want to pull any cash. And I think it's just because I don't fully understand the I guess it would need to be for a big reason. Like if I were to be going into a home to purchase another home or to
Renovate.
yeah, renovate the house,
Mhm.
but just for
Mhm.
like to have cash, like I
No,
just
cash out means like in this situation, because she's asking about high interest credit cards. So cash out would be she's taking additional cash from the refinance portion of the home of the mortgage refinancing. She's taking additional cash out to put towards the credit card debt.
oh the debt. Okay, yeah,
Mhm.
that yeah.
So cash out just means, okay, I'm gonna refinance and then I'm gonna borrow a little bit more because the value of the home is probably way more than what you owe. So you refinance it and you borrow cash against a portion of the equity just to pay down the credit cards, and that can be beneficial depending on your circumstance. With a home equity loan, the repayment, the way you make the repayment is going to determine whether it's beneficial for you. Some people can pay the principal and the interest and the mortgage payment and be comfortable because of what it's doing for, the debt payments soak up so much of our income, so much of our paycheck, that sometimes this option may work because you may make way more money. It gets
It gets a
specific
little,
when it
yeah,
comes to, because you don't know, there are a lot of different variables to go in it. I'll say it like that. But I hope that helps, Renee. It's really important. Anytime you are considering refinancing, anytime you're considering loans, I've given loans for people who have paid off cars and they wanted to borrow against the value of their car. I've given out loans for that, and it's a we put a lien on that vehicle because now they're borrowing against the value of their car. But it just depends on what works for you. The most important thing, y'all, is to pay attention to the terms and the interest, and if it works for you, it works for you.
that's good. Here's another question from Sharon. Is it best to pay credit card daily, weekly, monthly? Or I think we kind of talked about, we
Yeah,
touched
I
on
think
that. So Sharon is clarifying, I pay my grocery bills using Klarna. Pay
Ooh.
a good decision.
First of all, Sharon, I want to say I just appreciate you for making a way, for
Mhm.
finding a way to make it work. I'm never going to suggest that you starve. If it's a way, if it's a route, if it's a ram in the bush, baby, do what you got to do. Sometimes it comes to that, just doing what you got to do. So I want to say that. When it comes to Klarna, I believe that's the this. I don't use it now. Forgive
Buy
me.
now and pay later. Like you,
Mhm,
you break it up
mhm.
into
So it debits from your account like every couple of weeks or once a
pay.
month or
Yeah.
something like that, right?
Mhm.
Just be careful with these because some of these report to, I think it's Klarna Afterpay, Klarna Afterpay. What's the other one?
I
Klarna
don't know. So I don't
Afterpay.
know.
It's another one. But just be careful with them because sometimes if you miss a payment or if you late on a payment, it'll report to your credit. If you got to do it and you can do it, if that's what you got to do, that's what you got to do. But if you can get out of that cycle, start doing things. One thing I did start doing based on, Affirm, that's the other one.
Oh,
If
fine.
Affirm, if that's what you, thank you, Bestie. My best friend texts me and said it's Affirm.
Aw. Thank you, Bestie.
Shout out to Jay. Hey girl. If you One thing I have started doing was using sinking funds with cash. I just started withdrawing. Now, listen, baby, I ain't rolling in the dough, but I'm trying to do better. Jasmine said get some sinking funds. I started pulling out $80 per pay period, and I just divvy it up. I'm really trying to figure out where I'm overspending or what, I'm trying to prepare for those expenses as they come. For example, I never paid attention to how much my household items cost me: detergent, paper towel, tissue. I have three daughters and a grandson. It's a lot of booties in here. Okay, baby, it's a lot of tissue. Okay, it's a lot of pocketbooks in here. Okay, we got monthlies going. Okay, sorry. Anyway, I had to figure out I had to figure out how much is this actually costing me a month. And so I started buying in bulk. I don't know. Do you all have Sam's Clubs out there in California?
We do. Hmm.
Yeah. So I
Yeah.
started going to Sam's Club. Baby, I got me 15 packs of paper towel for $20. Okay. I got a whole bunch of tissue for like $22. So I started doing that, and that lasts me an additional that lasts me versus going to a Family Dollar where I thought I was getting the best deal. So you just got to start paying attention to how you're spending on what, find different ways that you can save, and then start building up. But if Klarna is what you need to do right now to feed your family, baby, that's what you got to do. Just know that sometimes if you miss those payments, it does show up on your credit profile.
Yeah, and if I can throw in there, I think we had talked about this last week, where you may be able to, if you're okay with this, maybe you can use food stamps. Maybe you can qualify for food stamps. So then that way you don't have to spend your liquid cash on it. I mean, some people are embarrassed about those things. I
Please.
personally am not. If you qualify for them, I know sometimes, I know out here in California, the qualification is, I'd be like, you literally have to be poor.
Mhm.
But anyway, if you are able to research or look at different options like that, so that you don't even have to spend any of your money on it and you can, stop using that, I would definitely look into um that option as well, if that is an option. I was having a conversation with somebody last week, and she was like, "Girl, I got like three Klarnas out there or whatever." And I was like, "Oh, why?" Because we're always talking about money. And she's
Mhm.
like, "Because if I have the liquid cash, I mean, why? I don't want to pay with my liquid cash. I'd rather just do the Klarna and then pay on it." And I was like, "But friend, you told me you wanted to get out of debt. I don't understand why Klarna
Exactly.
is debt. I don't care if it's 0% or whatever. When you get your paycheck, you that's the reason why you keep coming to me talking about your debt. Like, friend, come on, friend, we
I
gotta be
I
better."
I used to help clients one on one. I haven't taken any client in a long time, but I had a client who I was helping with her credit. And credit is really a microscope on your financial habits. That's all your credit is. It's a microscope on your financial habit. And when we looked over her credit, she had 10 affirm accounts.
So
They
that really does go on your credit. I didn't know that it does. So it
affirmed
does.
on her credit. And
Also,
she was
okay.
doing well. She was in the nursing field. She was doing well, but she ran into a hard time. You know how much her monthly payments ended up being for all of her? I think it was a firm. It was $500. So when she ran into, it was $500 that they were automatically debiting out of her account. When you ain't got it, baby,
It's just like the
it's
government. They don't trust you. They like, I'm gonna get mine.
it's different. And then if the funds are not available, you then have NSF fees to consider, and things like that, overdraft fees to consider. So just be careful with it. If you need to do it, like I said, you need to do it, but be advised that if you miss a payment, if you late on a payment, it does show up on your credit report. We didn't talk about it as of yet, but the most important factor of your credit score is your payment history. So I know you may have I've seen I've had clients who were like, "Oh, it's just a $25 Capital One payment. I ain't gonna pay it right now. They'll get it later. I ain't worried about them and they little $25. They'll get it when I get it to them." Okay, baby. She missed that credit card payment and lost almost 100 points on her credit score.
Yeah, yeah.
Late payment. And you can really lose up to 140 points. So just be careful, and do your best to make your payments on time for the things that are showing up on your credit report. I always use the example of a credit card or an electric bill. Yeah, the electric bill, you need your lights, but maybe you can call them and make a payment arrangement so that you can give Capital One a little light $25. You know what I'm saying? Because we all trying to stay afloat, and we all trying to do the best we can, but baby, it's strategies, it's different things. There are always options. Don't just assume that, oh, it'll go away and yada yada yada. So make
Yeah.
sure you paying your bills on time. Before I forget, one last thing, Jasmine, before you go to another question.
Mm-hmm.
The account on your credit report that bills your credit with $0 is your student loans.
Mm-hmm.
Y'all, please make sure your student loans are in good standing. Call them people. Say, I don't know why I be wanting to say Sally Mae lately. Navient. What do people live? What they name? The student loan
I
companies.
think
Yeah.
that
Navient. Call them up. Maybe I ain't got it. I need assistance with an income-based repayment plan. IBR. How do I go about? I need assistance. Do not let those student loans continue to damage your credit. If you're not paying attention to your student loans, please take a look at your student loans. Call the student loan company. Tell them you can't afford to make the payment, because student loans report as a loan, as an installment loan on your credit, and that does build or break down. Bust it down low to the floor like Meg the Stallion needs. You want your credit score to be down there on the floor, or you want it to be up there? Okay. Yeah, but
I know that. That's good.
yeah, call your student loan company and make sure that your loans are in good standing, because even though you're making a $0 payment with the income based repayment plan, it is still reporting to the credit bureaus as a positive account. That payment history is still going to help build your credit report. It still shows up green. When you miss a payment, girl, find that cliff. Put your credit score right up there because you're gonna push it right off. Okay. And listen, if you have late payments, don't be discouraged. Okay. Don't be discouraged if you have late payments, but let's do something about it. Okay. Let's
Yeah,
start. Let's start making
that's
those
good.
payments on time so we can start rebuilding. Okay. Rant over.
So Abby says, how do you become financially literate? It's hard out here for single moms.
Oh, Abby, I get it. You continue to follow people like Jasmine. Another one of our favorites, because I heard you said the other day, is Diana Marie. She
Mhm.
really talks about the real reality of um how the mind plays into what's going on with your finances, and just prayer. Just stay connected to positive financial pages. One of my favorite two of my favorite financial content creators, Daisha Kennedy. Her handle is Broke Black Girl on Instagram. She really speaks from a perspective of single moms. She's a single mom of two boys, and she started off her journey just figuring out not credit, figuring out finances, and she talks about it all the time. Her content always feels like a hug to me. I love her content. And the other one is the B word on budgeting. Y'all know Jasmine be down there.
Oh,
She
oh,
little cousin Selma. Her name is Selma,
Selma. Oh, yes.
but her page
Oh, she be
is
on here. You on here, girl? She had
Selma.
commented under the post, Selma.
Oh yeah,
She
she
probably
did comment under the post.
yeah.
That's my girl. So yeah, you those are two of my favorite content creators. But just start looking up hashtags on Instagram, and just start doing your research. Listen to podcasts, whatever way you consume information best. Connect to content creators in that space.
I agree. And that's pretty much what I did. I didn't take a class or anything. I had tried to follow Dave Ramsey years ago, and it just didn't click for me. And I was on YouTube one day and I started watching Shay Budgets and Michelle. Can't think of her. I don't think she's on anymore, but that's when it like clicked. And then I started watching Clever Girl Finance, and then I got
Mhm.
her book, and I read her book, and I read The Organized Elena. I read her book, and then I just started going down a rabbit hole of figuring out what was going to be best for my life. And then I
Mhm.
discovered cash envelopes, and I was like, oh my God, this is and then that's when it just all clicked.
Mhm.
So definitely, yeah, find someone who you can learn from.
Mhm.
Because at the end of the day, is adding and subtracting. How much money are you bringing in? How much money is going out? Those are the foundations, right? And then
Absolutely.
once you know the foundations, then we pull in for credit and all this other stuff that's out there. But I would say focus on the foundations, and the budget mom who is here on YouTube, and she's on Instagram as well. So just look it up, budgeting, and a whole bunch of people will come up and find the best single mom, because I think not all of those people that I named are single moms. When I first started, my daughter was under 18. Now
Mhm.
she's 21, but I'm still financially caring. So it's
It's
a
a
different. I don't
journey.
know how old your children are,
It's a
but even having a 21-year-old child, you still have to manage in a way that's going to help them, because now they got grown people bills.
I
Even
know.
though the kids, they got grown people bills too, because them school fees and all that stuff. I'd be like, Lord Jesus,
Yeah.
I'm out of that.
Yeah.
But yeah, that's
Wherever
how
you spend your time, Abby, if it's on TikTok, YouTube, Instagram, wherever you spend your time, start with a search. Start with a search, and your algorithm will guide you. Your algorithm will help you find the content creators who are creating content that'll help you.
yes. All right, let's see if we can get to these are comments. Let's see. What is a prescription debit?
That's a great question. Baby, I'd have to Google it. I ain't never heard of prescription
A
debit.
prescription debit. I
It may be the only thing that I can think of that may be similar is like a HSA, where you get a debit card and
yeah.
you can use it to purchase. You can use it for medical things. There are also some things like on Amazon. Um, where you go to check out when you buy certain things. For example, I think I bought a heating pad one time with my HSA card. You go to CVS, you go to Walgreens. There are certain things that you can buy that qualifies for HSA. It's like medical related stuff. I know that when I had a HSA plan, they did issue me a debit card that I can go use to make purchases. That's the only thing I can think of. I hope that answers the question.
Yes, yes, I've had one of those too. It's very helpful.
Mhm.
Yolanda says, "Do you think it's wise to use cash advance from a credit card to consolidate a debt that has a higher interest rate than the cash advance,
Run. Absolutely not. No, ma'am. Don't do that.
even if the cash advance has a lower interest rate than the card you're going to pay off?"
Usually when okay, let me answer it this way. Usually when it comes to cash advances usually have a higher rate than the interest rate on the credit card. So in the event that you do see a cash advance rate lower, I just don't know what cash advance rate would be anything lower than 20%. But if you see it, you see it.
Mhm.
Um, just be careful. If it works for you, it works for you. But before you do that, I mean, you got to be in a bind of all binds to do something like that. Again, sometimes we run into situations where we got to do what we got to do and figure it out later. But I would recommend trying to find ways to increase your income before doing that. Again, unless you're in an emergency, dire situation, and that's the route that you have to take. Because doing a cash advance doesn't help you pay off debt, it puts you in more debt. But you said to consolidate debt that has a higher interest rate than the cash advance. Baby, I mean, if it worked for you, Yolanda, if it works for you. If that's what you need to do, that's what you need to do. But in most cases, just pay close attention to that rate because in most cases, cash advances are higher.
Let me tell you, I love that y'all are. I'm so late on these comments, and I'm trying to follow them. I just I love the community in these comments. I'm late. I'm trying to stay. Let's see. I did the opposite than my parents, talking to my kids about money. My errors I did in my 20s. Ooh, yes, I
Yeah.
something that we definitely need to do.
Yeah, Mary,
Um,
I actually commit a lot of my time. The reason I strayed away from the credit space is because I actually committed my time to keep teaching kids financial literacy. I designed a financial literacy curriculum for children. I now want to work with young adults. I have a almost 21-year-old, 18-year-old, and 15-year-old daughter. Those are my daughter's ages, and just talking to them about the importance of credit and financial literacy. Listen, these kids need it because we didn't have the conversations when we were younger. So yeah, I that shout out to you, Mary, because that is real important for them to learn now.
I agree. I would like a copy of your budget journey book and the Budget Moms workbook. I think I have a link on
And you
Instagram.
got your own Instagram?
In my description box as well. Okay, yes. Okay, let's see. I pulled my credit and saw lien. I paid it $250 years ago. I didn't know what that meant yet. Paid it quickly. Oh, um, can you talk about what a lien is?
Um, ish. A lien is like when a company. Mm, a lien is like when a company. It's hard to describe. It basically means that somebody is like I don't know how to explain it.
It could be
Um,
like, for example, like a
okay,
home, right?
for
If you don't
example,
do a mortgage.
a lien on a car means like when I put a lien on somebody's car, that means that I gave them some money and they owe me money, and this property is now ours. So when you have a lien, sometimes you get liens against bank accounts. Sometimes you get liens. That means you owe a company some money, and baby, they coming to collect. It is a legal route to collect money from you. I hope that makes sense. Oh,
Oh,
somebody in the comments said the IRS. Yes, if you owe the IRS, they will put a lien against your account, or they'll put a what they call it garnishment on your paycheck so that they,
that too.
they have to take their money. Yeah.
I just had just about every
Hey,
bad financial.
That's how we learn. Sometimes we gotta learn the hard way. We get hard headed.
Is it a good idea to take a hardship withdrawal from your 401k to pay off debt?
Woo, we was talking about this offline earlier, Kayan. Listen to me. If that's what you got to do, that's what you got to do. Now, I would consider when you do something like this, right? It's not terrible, but y'all, I really want y'all to do the math on this type of stuff. So if you decide to do this and you see that before the lien you are making $1,000 in debt payments, but once you take out the lien, if you do a hardship, that means you don't have to pay it back. Okay, let's say you paying $1,000 a month in credit card debt. You take out this hardship withdrawal to pay off these credit cards. You now have an additional $1,000 in income per month. I want you to seriously increase the percentage that you are contributing to your 401k, because you might not be able to pay the full 1,000, but your retirement is important, KN. I also want you to consider your age. How much longer before you retire? If you're really young and you got time, then you know what I'm saying? I just want you to continue to contribute to your 401k and make sure you increase the percentage just by a little bit. Really, you need to really go up a little bit for real, because you got to make it up. It won't be as aggressive as paying back a 401k loan, but you still need to honor yourself and honor your future and make sure you contribute back to your 401k. Does that make sense?
I think so. Hmm.
Mhm.
What is your advice when a credit card company tries to sue you?
Oh, Mocha, this is a great question. I love this question because most people think that when they get, because sometimes the credit card companies, they'll serve you, Jasmine. They'll send the people around there to your house and serve you paper and say you've been served. Okay. The first thing I
Yes.
want you to know is you're not going to jail. Okay. The second thing I want you to know is it is extremely important that you respond. When they try to sue you, you need to respond. You respond. Please hold. I am not an attorney. This is not legal advice. Okay. I am not an attorney.
He told me.
I am not an attorney. This is not legal advice. Okay. This is a recommendation. Okay. I encourage you to respond to the company by going down to your local courthouse. That's usually how you respond. Whenever a company tries to sue you, they serve you with papers, they give you instructions on what to do. You go down to the courthouse and file a response. Here's what's going to happen. Either they're going to not show up to court, drop it, and you won't have to pay anything, or you're going to make a payment arrangement. You're going to tell them how much you can afford to pay on a monthly basis, and in most cases, you make that payment arrangement. The worst thing you can do when a credit card company tries to sue you, the worst thing you can do when a credit card company tries to sue you is ignore it. Please do not ignore it. It's not going to go away. And if it go away, they coming back. And if they come back, baby, it might not be so nice the second time around. Okay. When they come back with garnishments. Okay. They're going to reach out to you human. They're going to find out where you work. They want their cash. Now, sometimes I told you I used to service credit clients. Okay. I've had clients in three different clients, three different scenarios. The first client was like, Sakia, I don't want no smoke. I'm going to pay Bank of America they $4,000 because they didn't need to leave me alone. The second client said, what I need to do. I said, go down there to the court. I told him what to do. He went down, he made a payment arrangement for $50 a month. He paid him until it was done. The third client said, they lying. That I don't owe them this much. What I need to do. And they provided the information, the documentation to support that the amount was incorrect that they were being sued for. The case got thrown out. They didn't have to pay anything. So it can go in either direction, okay? But the biggest thing, do not ignore it. Do not ignore it, okay? Because they're coming back.
That's good. All right. Oh, I'm so up here. Let me see.
Shonda say
Um,
portfolio is a pain.
so is it best to start with building up your emergency fund and then start paying off debt slowly? And then bless yourself with
Then
good.
bless yourself with a
Yeah,
good
bless
gift.
yourself with good gift.
That's a great question, Sharon. It depends on number one, how much money you have. Number two, First of all, you need to save something. I don't care if it's $500. When you get your tax return, you need to save something. Start building up your emergency fund, but don't think your emergency fund has to be at the max before you start paying debt, before you bless yourself with a good gift. Your good gift might just need to be on the lower side of things, depending on how much money you have. So it does vary, but I do believe that you can do all three at the same time. Here is a good way to build up your emergency fund. Put a portion into a savings account, preferably high yield, because number one, it earns more interest. Number two, it's an online account that you can't go touching and carrying on. Okay. Do not put your emergency fund directly next to your bill account, directly next to your checking account where you could go in and just go, because it's for an emergency. Okay. It's for an emergency.
$20 from my emergency
Yeah,
fund.
yeah, 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 yeah. You know you want to dibble and dab, okay? So put your emergency fund in a high yield savings account, right? And then what I want you to do after that is to set up a recurring transfer from your account where you receive your direct deposit, or you might be able to do a direct deposit directly with your payroll company into the emergency fund account. It doesn't have to be anything drastic, y'all. It don't have to be $200, $300 every pay period. It don't have to be $100 every pay period. Do something light. Do $25. If your budget is real tight, do something light. You know, but that's
Yeah,
how you start building your emergency fund. You set it and forget it. You ain't got to keep remembering it, and it's out of sight, out of mind. But
that's good.
you can do that. That's a good way to start. Then you look at your debt. Take how much X amount of dollars. This is how I'm going to spread it out towards my debt. I'm going to do the snowball method. I'm going to start with the lowest debt, and I'm going to go there, start there. Then you go buy yourself something.
That's good. So I'm so sorry, Yolanda. I hope I see you have another comment here that says, please pick my question because you're looking to buy a home. So I believe that Sakia did answer this question. The interest rate is higher than the cash allowance on the credit card.
So
So
if,
yeah,
if if that's the case, if that's the case and it works for you, Yolanda, then you can take that route. Okay. But I want you, before you do that, I want you to make sure that you've exhausted all other options of additional income. If it's a dire emergency and you feel like you want to do it, then you can do it. Even if it's not and you decide that's what you want to do, girl, that's your business. You can do it. You can do it if that's what you want to do. But when you take cash advances, it's more debt. It's more debt. But you're using it as a personal loan. So I guess the other thing that comes into play is how much of a cash advance are you able to get? And will that full cash advance cover the full amount of your credit card debt? Because similar to balance transfers, we were talking about the city card earlier. If you get approved for a city card for $3,000, but you got $5,000 in debt, now you have to make a decision because you're gonna have two payments. So you also want to consider that. But Yolanda, if it works for you, it works for you. There's no one size fits
yeah,
all. Okay.
yeah, that's good.
I hope that
Um,
answers the question.
Somebody says, what do you mean falling off, and what about hospital bills?
Oh, great question, Lulu Shonda. All right.
Mhm.
So, on your credit report, there is and I believe she's referring to when we were talking about TransUnion. So, on your credit report, let's say there is a debt for Sprint, them stinking dogs. Oh, sorry, let me not say that on Jazz Channel because they hurt me bad. All right, so let's just say you have a debt for Sprint, and you the debt started reporting on your credit. What year we in? The debt started reporting on your credit in 2009, 2018, right? After a certain time frame, that debt is removed from your credit report. Now that doesn't mean that you could walk back in Sprint and get another cell phone. I don't even know Sprint around, but that don't mean you could walk back in there and still get an account and they will no longer see the debt. It just means that the debt won't be reported on your credit report after a certain time frame. It's usually 7 to 10 years that an account, that's bankruptcy. It's usually no more than 7 years that a regular account will show on your credit report as a collection, right? So, for example, baby, I hadn't got Spody. Y'all, let me tell y'all a quick story. I hadn't got Spody, right? I hadn't started paying attention to my car payment and realized that my $380 car payment, only $100 was going towards the car. And the rest of it was interest. My interest rate was 18% on the car, right? So I called the people up. I think it was Wells Fargo. I say, can y'all? I didn't know nothing about nothing. I was young. I had these babies, and the money was tight, and I was trying to figure out what was what. So I called them and asked them to basically refinance it. They couldn't do it because my student loans had my credit in the trash. I didn't know that. I didn't know better. What I did, got an attitude and told the people to come pick up the car. I ain't paying it no more. Y'all don't want to lower my payment? I ain't paying it no more. Come pick it up. I had done bought me a truck, cash with my tax return, $5,000 cash. I had done bought me a truck. I said, okay, come pick it up. Child, a repossession on my credit. Repossession on my credit. It stayed on my credit for 7 years. But at the 6th year, I could see when it was falling off. So I knew, okay, now this is going to be falling off. I think I had like a few months left on it. And I went and got another car at a lower interest rate. But that repossession stayed on my credit report for a long time. So it basically just means that after a certain time frame, the account expires and it falls off of your credit report. Some of y'all ain't looked at y'all credit report in so long and you think something on there and it really don't be on there no more because it done fell off. It
Yeah, I
don't
can't wait to go to
where you going? Tell me, where you going?
report.com.
Uh-huh.
Report.com, and we're going to look at TransUnion.
Uh-huh.
So on there, we will be able to see when the accounts are falling off.
Now, also be advised, you reminded me when you said it, also be advised that everything that is on one credit bureau is not on the other credit bureau, not always. So some because companies have to pay to report information to the credit bureaus. So when Capital One reports your account on your credit profile, they have to pay TransUnion to show their account on your credit profile, right? So some companies don't want to risk or don't want to pay to report that information to all three credit bureaus. So before you apply, you also want to find out, before you apply for anything, you want to find out what credit bureau do you pull from. Because if the collection account is on TransUnion and the bank pulls from Experian or the bank pulls from Equifax, oh girl, the collection account ain't even on these credit bureaus. This is why it's important to pull all three credit reports. I want y'all to get all three now. Okay, I want y'all to get all three, but TransUnion will be telling you business.
Okay.
TransUnion tells it. So if you have an account that's on Equifax and is not on TransUnion, you might not get that fall off date. You might have to do a little math in your head, okay? But and then you can decide from there if you want to pay that collection or not. Y'all, I done said so much. I hope y'all find this information useful.
I think so. We still got some questions.
Wait, before I forget, hospital bills. Hospital bills, there was a law that passed it was either 2022 or 2023. Any hospital bill under $500 will not show on your credit report. If you pull your credit report and you see a hospital bill for under $500, write a letter to the credit bureaus and tell them they are not allowed to report this and ask for it to be removed. It doesn't mean that you don't owe it. It just means that it doesn't belong on your credit report. Legally, they cannot report it. Also, hospital bills no longer have as much of a negative impact on your credit score as they did before, your credit worthiness, I will say. So before, if you had a phone bill collection and a medical collection, it will both equate to it will both be like hurt your credit in the same way. It would have the same type of impact, but medical collections have less of an impact on your credit worthiness. If you're going to make a large purchase like purchasing a home, you will need to take care of those medical collections before you close on that. You may have to call and settle or something if you're at the closing table and you see medical collections, but for the most part, medical collections don't impact your credit worthiness as negatively as before. Okay, next question. Go ahead.
That's good.
Didn't I tell you, Dad, this could go on forever? Didn't I tell you?
And it's 6:30 out here, so I know it's 9:30, y'all. It's 9:30 for my East Coast besties.
It's all good.
But one question: if you are paying off your credit report, will that boost up your monthly rent that you pay?
That's a great question. And Sharon, I know a lot of even my company where I pay rent, they try to get me to report my rent on my credit. Baby, I don't play like that. Y'all ain't finna go playing around my credit because you're in my business. What you want? To me, it's too new school. That's just because I'm old school and I know credit. But your credit doesn't impact the amount of rent that you would pay. That is two separate things. Your rent, the amount of rent that you pay is determined on the property owner of wherever you are living, or the management company, your community, those type of things. The rent is going up so high. Oh my gosh, rent is going up so high. So, girl, shout out to you and all the besties who are out here surviving with
Yeah.
these rent payments, because over $2,000 for a two-bedroom is outrageous, but it's looking like that a lot lately.
Just imagine out here in Cali.
I could only imagine.
Yes. Okay, let's see. Jennifer, we're down to one credit card that has a limit of 19K. We keep the balance low. They always ask us if we want to increase, and we say no. Is that good or bad?
It's not good or bad, but I would tell you, accept the money, girl. Especially if you have the financial discipline to not run the debt up. If they are going to give you a higher limit on your credit card, take it. It doesn't hurt you anything to have a high credit limit available. It complements your credit worthiness. Especially because you never know if you'll ever be, and God forbid, if you'll ever be in a situation where you may need to lean on your credit for a large purchase. The more available credit you have, the less it impacts your credit utilization. So it's not bad if you have, especially because you have the financial discipline. You said we keep the balance low, so if they offer it, take it, girl.
Oh, that's good. That Costco City card. Yeah, I don't. That's why I was asking you. Is that the same as just a regular city card that
Yeah,
you were saying percent is
I
good?
mean, it just means that Citibank hosts and partners with Costco for that particular credit card. But again, it's in the terms and conditions of the card if a balance transfer is available. Most companies offer the balance transfer as an intro offer, but I have a Southwest airline card that's hosted by Chase, and because they in my business and they see that I got debt, they be sending me like these little checks and say, if you want to do a balance transfer, you just write a check for this amount and pay off your credit card. So they may offer it. So what I would suggest you ladies do is give them a call and see if it's an option. See if they have a balance transfer option available for this particular card. Now, I want to tell you, just as a banker, let me just tell you, they're gonna try to get you to open another credit card, okay? Because you need it. And if it works for you at the time and that's what you want to do, then go ahead. But don't be letting them people play around on your credit now. Okay. But yeah, just call them and ask them if that's an option.
That's good. Should I be concerned about the merger of Discover and Capital One? Which card will it affect? I have both. I don't know anything about
That's
that.
a great question, Rose Sharon. I saw an article. I get articles sent to my email every day. I did see an article about the merger, but I don't think there's anything to be concerned about. Not yet. They are both, first of all, they are both great companies. And I do believe and stand behind the fact that they both do what's best for their customers. They are very customer friendly and customer driven. So I wouldn't be concerned about it. And as how it will impact which card, I don't know the black and white answer to that. I remember when Capital One bought out Walmart. They bought Walmart from Synchrony. I just got a new card and the same account number, and I had access to it from my Capital One app. So in my head, that may be something that could come into play. Maybe the account number would stay the same and you would just access your account from Capital One. If they anything that they do, any changes that they make, they are legally obligated to notify you in writing. So just keep your eyes on your email and your mailbox, and then you'll be notified as any changes come into play.
That's good. Tiffany says, I just have personal loans. Can I balance transfer those?
It depends on the terms and conditions of the balance transfer card. That's a great question. Off the top of my head, I don't know any I don't know. I know a lot of balance transfer cards, but I don't know if that particularly is in the terms and conditions. So I would just do a little research and see which cards offer that as a benefit.
Awesome. Next question. Could you talk about the first time home buyers and what we need to know?
Um, that is a very layered question. Um, it's such a layered question. First time home buyers, oh, I can't answer that simply. I'm sorry. It's a layered question, but there are plenty of workshops. In my first time home buyers experience, I did go to a class, I did get my certification, but here in South Florida, the market just didn't line up with the math that was happening for me. So I decided to continue to rent until I could move elsewhere. But when I was looking and when I did put in contract for places, my experience was that the sellers looked at me sideways because I was with the first time home buyer program. But that's a situation that could vary based on where you are. I would definitely encourage you to go to the homeowners workshops in your area. They are all over the place. And just really, again, pay attention to terms. Also, sit with a mortgage loan officer to figure out where you are and where you need to be. But I want to say this as well, don't go and sit with the mortgage loan officer too soon. You know what I'm saying? Um, but they still can, what they'll do is they'll pull your credit, they'll see what you qualify for. They can really paint a clear picture for you of what steps you need to start taking before you're ready to actually purchase. And yeah, just go from there. But
Yeah.
I know that
That is
wasn't.
a fair question. I think it also depends on like what state you're in and things like that. I know here in California there is a program that I can't think of right now, but when I remember, I'm going to put it on the community posters. I don't know if they're just here in California or if they're across, but they help you. They walk you through the process of getting your credit together and all of that. And some people it takes them a year, so they walk with you through the whole thing. Once I
Mhm.
remember the name of the program, I can put it in, but
You talking about
yeah,
NACA?
what's it, NACA?
NACA? Are you
Yeah,
trying?
them. Yeah,
Yeah,
NACA.
NACA. I started trying to do some work with NACA too, baby. They got a lot of terms and conditions over yonder, so pay attention.
Oh, okay. Yeah, I didn't, by the grace of God, my experience was very easy.
Hmm.
Because God is so good.
Yes.
Things have fallen off the credit. I talk about that, right?
Come on now.
things have fell off because he knew when they was gonna need to fall off, when I was gonna need to purchase. And then, I had money that I was able to put down. And
Hmm.
so my process was very easy, I will say. Very different. One, because I had cash, and then two, because I just, I think it was around that time when everybody was buying houses.
Yeah.
2020 when the market
Ooh,
did
big, big home buying year in 2020.
right before
I
Trump
got so
left.
many. Yeah.
Everybody, I mean, it was like
Yeah.
hustle,
It was,
hustle. So
it was
um
definitely
it
a
was
buy.
yeah, it wasn't that difficult. So and I'm very green when it comes to that. Um,
Hmm.
so maybe we can get a real estate agent, or it wouldn't be the real estate agent, it would need to be the loan officer.
Both,
But
either one, mortgage loan officer or real estate agent can speak to that.
all right, let's see. Is it good to use an app that is called Klarna that helps you pay purchases like food and clothing monthly? Like if you want to, oh, I think we talked about
Yeah. Hmm.
that. All
Y'all
right.
here.
I have moved on to my next step, which, oh, congratulations.
Congratulations, anime girl.
All right, let's see. So Sharon, you're gonna start using sinking funds. That's good.
But is a sinking fund the same as savings when you saving for something for the future, like your birthday? Yes, yes, it is. I only
Yep.
answered because Jasmine was drinking, but yeah, it is.
No, no, you good. You good. I think we're coming up on our time. I just really I'm trying to get, should people consider applying for Discover Card before the Capital One merger?
You can. You can, especially because it hasn't happened yet. And again, it's not gonna hurt you. I love Discover, y'all. I just love them. I really do. I like Discover. They're
I hear
good.
a lot of good things about Discover.
They're a good starter company for credit. They are. And you know, they have and Capital One is good. Capital One used to be my top dog for beginner credit. They still are the most forgiving company, but Discover has better rewards and stuff like that. So I like Discover.
This question here. My credit score is in the low 500. My home is paid in full. However, I can't get a bank to give me a line of credit for the home repairs that I need.
All right, so it looks like it's Leisure. I hope I'm saying that right, or Lazaya. How you say
Yeah,
it, girl?
probably
Tell me.
Messiah, Lesia.
Okay, so what I would recommend is first taking a look and without knowing anything about your credit profile. When you say that your score is in a low 500, the first thing I would say is take a look at your payment history. Are you paying the monthly bills that you have reporting on your credit report? Are you paying those bills on time? If you are not, start there. Start with payment history. Start to recover from those negative payments by making on time payments. Also, you want to take a look at if you have any credit cards, um how are they maxed out? That's another thing that heavily impacts your credit score. And those things are not like overnight things that that would improve your credit score, but those are the top two things that weigh down your credit score and your credit worthiness, because it's not so much about the score is important, but the score is only half of the equation. The other half of the equation is how you are managing the finances that you have. So but simultaneously they work hand in hand. Once you start improving your payment history, once you start lowering your utilization, then you will see an increase in your credit score. They do work hand in hand. And then the next thing I would say is to take a look at any negative accounts that you have on your credit profile. Do you have collection accounts? Look and see when they're falling off. That is a tough situation to be in. I did have a client with a similar situation who had a huge electrical problem in her home, and because her score was so low, she wasn't able to qualify. But it took us some time, and I'm not going to say it was less than a year, but it's still a lot of time when you need repairs done in your home. It's not like an immediate solution, but I would say take a look at those things, pull your credit report, see what's what, and start from there. Start just like y'all, please use auto pay. I know we kind of scared of it, but use auto pay. We got to get out of the cycle of making those payments late, or set off alarms that wake you up in the morning. Set one for every time a bill due so you can pay it on time,
Yeah,
because those things really, really do impact your credit score heavily.
that's good. So here's a question. What books do you recommend to teach kids about money? I have a 14 and 10-year-old.
Oh, that's a great question. I don't have. First of all, I made my own book for kids for a savings challenge. It's on my website, speaksakia.com. But there are a lot of different books out there. I would go to Amazon and just search financial literacy for kids and look at the reviews and start from there. There are not a lot of. Oh, what's her name? There's someone on social media, y'all. I know somebody in this chat. No, there's a lady on social media. Goodness gracious, her name escapes me right now, but she has a game, a board game for kids. Is it Save to Sense? What is it called, y'all? Y'all know what it's called. Somebody in this chat know. But she has a board game. Look up board games for kids, money board game for kids, and it'll pop right up.
That's good. Thank you.
That's
So here's another question. Which high yield savings account would you recommend?
There are a few different ones. I am a fan of American Express because American Express has a high yield savings account. Now there are a lot out there, but baby, brand is important to me because don't play with me. I don't know all y'all who y'all is. So I like American Express. I have two American Express high yield savings account. I know that Capital One has a high yield savings account, but the difference between the two is American Express gives you a feature to send your money express. Like in the event that you need to access your money fast, you have the ability to do so for free. And I don't believe Capital One has that feature. You have to wait that 1 to 3 business day time frame before you can get your money. For that, for me, that's why I like American Express. There's also a couple of other ones out there. I hear a lot about Ally because they have the ability to do sinking funds with their high yield savings account, but I don't have an Ally account. When I looked at it, I looked at them terms. If I ain't show, I ain't show. But there are a lot of different ones you can take a look at. Brand is important to me, and nobody is more reputable than American Express. So that's where my account is.
If a charged off balance is sold to a debt collector, how should I respond?
You all okay. If it's sold to a debt collector, now it could be a debt collector, ABC Collections, or it could be a debt buyer. Debt buyers are like attorneys who collect on debts, and they send legal documentation to your house. So you always want to get something in writing to explain the debt. But if it's a debt buyer, like an attorney, they're gonna take you to court. They gonna take you to court. But you should always respond by asking to get something in writing, and then trying to work out a payment arrangement if it's feasible for you.
Okay. Here's a question. What exactly is your FICO score? Oh.
Girl, you want to know my credit score? That's what you asking me?
I thought she was asking what is a FICO score. I thought she was saying what exactly.
I was like, girl, let me show you my credit score, girl, because I got good credit. Did I get carried away, Lynn? I'm sorry. I get carried away sometimes.
You know I share mine. I'm at a 705 right now. I'm building mine up.
I was like, girl, let me put on my credit score so I can show you. Okay, that's a great question. So there's a FICO score.
I mean, she said, "What exactly is your like? What are you asking?"
Y'all listen. A black mama. I got carried away. I'm sorry, Lynn.
Do you want to know if she can talk? Like, you talking all this, but you got a 500 credit score. No.
Okay, sorry, y'all. Okay, let me stay focused. Okay, that's a great question, Lynn. All right, so there's a FICO score and there's a Vantage score. Okay, the FICO score is the big boys. The FICO score is what most companies look at when you are looking to. There's so many different levels of a FICO score. Okay, there's FICO 2, FICO 8, FICO 10, FICO 10T, which is a whole nother talk show. There's a lot of different FICO scores, okay? But the FICO score is the most reputable score. That's usually what's going to be viewed when you're making large purchases like a home, like a vehicle. The Vantage score is usually the score that you see when you log onto a mobile app like Credit Karma, like what them people name? Smart Credit Sesame? Credit Karma, those companies usually use Vantage scores. I will tell you, you can go like for companies like Discover shows a FICO score. Wherever you see your credit score displayed, somewhere in fine print is either Vantage or FICO, and that's how you'll be able to tell which is what. But when you go on to the, please hold. Look, now I'm looking for my credit score for real. Hold on, y'all. Hold on, y'all. Hold on. But that is how you identify the difference between what you're looking at. Is it a FICO score or is it a Vantage score? I know like Capital One uses a Vantage score and Discover uses a FICO score. So I'm on my Discover app, and when I pull it up, it says your FICO score. Hold on, y'all. Hold on, let me see. You can see, wait, you can't see. Oh Lord, it won't show. My FICO score is a 738. And that's with debt. When I get my debt down, I'm coming for the 800s. Okay? I'm coming for the 800s.
So I see Moni. I see Moni is in the chat. Thank you, Moni, for assistance. She said Moni says FICO Fair Isaacs Corp is a company that rates your credit usage to generate a FICO score.
Mm-hmm.
I have my student loans forgiven, and I have my credit cards down from 10,000 to 1,600.
Yes, girl, let's go.
So, so I'm worried my credit score low. Core, okay, answer this.
For a few minutes. For a few minutes, girl. Don't worry about it. Don't worry about it. Now, I will tell you that you do need to have an installment in order for you to maximize your credit score. An installment loan, a revolving account. And a revolving account is like a credit card where you have a limit and you make monthly payments. That's a revolving account. And then an installment account is I had a $10,000 loan and I'm making $250 every a payment every month until I pay the $10,000 off. That's an installment loan. So you need an installment loan, a revolving account, and then real estate. When you have all three of those and they're all in good standing, baby, you're going to be in the 800s sipping and chilling.
So because I just paid off my personal loan, that's going to be bad for me score-wise?
If you don't have another personal loan that you are actively paying on, you could see a decrease in your score. But if it's reporting on there and it's still on your report, it ain't going to hurt too bad. The history is there. Y'all see, I made my payments on time. I paid it off. It's all good.
All right. Well, I know that we have a ton of more questions, but we are 2 hours in. Let me see.
I told you, this credit talk can go on for. I told you.
We are 2 hours in. I want to thank you guys so much. I hope that we have. Let me see. Okay, can we answer one more question?
Yeah, go ahead.
This is the last question we're gonna answer tonight, and then we are gonna close out today's Friday. Can you address what it means to have a thin credit? I don't have any debt, because I think that's a good question.
Okay, so that is a great question. So a thin credit profile means that you just don't have multiple accounts, like you don't have a heavy credit report. Now, you don't have to have debt to have credit. In the event, let's say you do not have an installment loan, you can go to your bank and say, I want a secured loan. Because the banks and the financial institutions understand that these are the things that make up a credit profile. You don't have to have debt, but you have to create a financial footprint. That is what your credit is. You have to create a financial footprint that can show that you are able to financially be like you are financially responsible. So you have some people who be like, oh, I don't need credit, I'm gonna pay cash. Okay, but when you want to go to the next level, you may need credit. And when I pull your credit report and it's empty, I don't know whether I can trust you or not with this line of credit, with this loan, with this car note, with this home mortgage. So unless you cash money and cash money millionaires taking over for the 99 and the 2000 and you just rolling in the dough, you want to pay cash for everything, you need a financial footprint. You need to show that you are able to handle financial responsibility. So you may not need debt per se, but you do want to have at least 2 revolving credit cards. You want to have credit cards on your account. You don't need to run up debt. You get a credit card, you put a monthly subscription on there. Netflix, Hulu, Apple Pay, Google Pay, I don't know what you use, the gym membership, whatever it is, something small that happens on a monthly basis, a bill that you pay on a monthly basis, you pay it in full at the end of every month. You are creating a financial footprint that shows that you can responsibly handle your revolving accounts. That is what I teach my 21-year-old daughter to do. She's building a financial footprint. If you don't have, sorry, go ahead.
I was cutting you off. No, no, go
No,
ahead.
the last thing I was going to say, which I did mention, if you don't have any installment loans on your profile, you do need an installment loan. If you've never had an installment loan, you need something. Go down to the bank over yonder, say I would like a secured loan. Give them $2,000 cash and say you want this $2,000 loan to report on your credit report, and then you're just going to pay yourself back. So it's just a financial footprint. You need that.
Yes. Now there is, of course, there's more than one way to do a lot of things, right? So credit is one way. There are others who believe or who buy things without credit, right? So you have your Dave Ramsey's, your Anthony O'Neill, those people who do things without credit. How they do it, I don't know.
Let me
But
tell you how
they
they do
do.
it. They pay
They
cash
do.
because they have a
Yes.
huge following and they get
Well, they
paid
were saying
right
that there's
away.
a way that you can. Yeah, I don't know,
I,
but if
and
that's
listen, different strokes for different folks. Some people don't believe that you need it, but I'm just going to tell you, I've seen people from all walks of life, and you need to create a financial footprint for yourself. In my professional experience, you
yeah,
need to create a financial footprint for yourself. If you
and
have the
mine,
proper
yes,
amount of, what you say, Jasmine?
I said mine too because I don't have cat. I'm not rolling in the dough,
Right.
and
We like the cash money millionaires over here.
I need credit.
So you want to create a financial footprint for yourself, and if you have and listen y'all, it requires discipline, and sometimes situations come up where your cash just might not be enough, and in the event that you do need access to it, credit gives you access. Y'all, I've been on both sides of the spectrum. I've had my credit score. I think when I started really paying attention to my credit was in the low 500s. I was probably at like a 505, 515. Shout out to my king Tio. He showed me the ropes. He said he was fixing his credit. And I'm like, how you do that? You with the people, what their name? Lexington Law? How you do that? No, he said I wasn't doing that. He showed me exactly what he was doing, and that I fell in love with it because there's so many people in our community who don't understand it, who don't really know the value that it brings. Listen to me. I went from paying 18% interest on a card. I was just so child, I don't know what I was going through, but I went from paying 18% on a car. I just made 2 weeks ago. 10 days ago, I made my final payment on my card with an interest rate of 1.9%. And I for the course of that loan, I paid like $2,000 in interest because my interest rate was so low. It just gives you access. And you don't only want access for you, you want access for your family. I believe that we are a blessing to be a blessing to other people. So, I mean, everybody has their own opinion about how one's financial journey should look, but take some time, sit down with yourself, talk to God, and decide what you want your financial journey to look like. Who is your why? What is your why? You're not doing this for you. I know that is your face you look at in the mirror every day. I know that it's your skin that you bathe when that you wash when you go take a bath, but you're not living for you. You are living to serve. You are living to be a blessing to someone else. So go get you some credit, baby. Okay, get you
Yeah,
some and do the right thing with it. With the right type of discipline, you gonna make mistakes. That's okay. We ain't Jesus. My name ain't Jesus. My name's Sakia. Jesus, the only perfect being I know. God, Jesus, the Father, the Son, and the Holy Spirit. Okay, and I am none of those. So be okay with making mistakes. Be okay with falling down, but be courageous enough to get back up and try again. Keep going. Keep going. Keep going. Learn from your mistakes. If it ain't take you out, baby, it's gonna take you further. Okay. Okay, I'm gonna
love it.
stop now. I go to
Love
rambling and carrying
it.
on.
Yeah, so I did want to I know that we were suggesting many people. There was also some comments about baddies and budgets, I think that was in there. She is heavy here on YouTube, heavy on TikTok, and I think maybe just TikTok and YouTube, I think. But yeah, she has tons of budgeting products that you can use. It's just so much out there. So yes, please do your research. I want to thank you so much, Sakia, for it's 10 o'clock where you are. thank you
Yeah,
for
girl.
being on this call and giving your time tonight. Like, you have no idea how much God has ordained this by you just being in the comments and sharing. And God, and we been knowing each other via social media for years, right?
Yeah,
And then
yeah.
just this appointed time. God is so
You know,
good.
I be trying to hide, but I was in the comments and I was like, I would love to come on and just share some information with the besties because, listen, the most important relationship we have is the one we have with money, aside from
Yeah,
God, you know. But
yeah,
that's a real, as an adult, our financial relationship is extremely important. So, it's my
absolutely.
pleasure to come on and to share. If y'all really want to pull me out of retirement, follow me on Instagram at Speak Sakia. And I do want to
Okay.
start getting back to posting more financial content. I had a grandson last year and just shut everything down and been in here hiding in this room until Jasmine said, until I couldn't help it. I was like, I could come on and talk. I really love talking about it. I can go on and on. So I'm glad that y'all learned from this. And if I come back, that'll be cool. If y'all want to do a part two, let Jasmine know. We'll have to schedule
Yes,
it.
we could do a part two because I know the conversation can, like you said, it can continue to go on. I want to encourage you to, yes, get back on. We need you, you know, we need you. So, membership, whatever it is that you can give, you are working in the vineyard and we need you. So,
I
thank
agree.
you so much. And this is going to be the end of our second Debt Free Fridays. If you guys want a part two, you got to let me know. Let me know on the community post if you want a part two, and we'll keep it going. But until then, have a great weekend. Peace out.
Good night, y'all. Thank you so much, Jasmine. Good night, everybody.
You're welcome. Good night.